Hey, what's going on, guys? It's Nick here from Ways of Wealth. Thank you for tuning in. It is week 14 of the market recap. If this is your first time here, hit the subscribe button. We do this every single week. We recap events of what's happening in the economy, what's happening in the stock market, and we see the relevance as to where we're going to deploy our investments or if there's any change or variance there. So we're going to talk about today some key factors. S&P is the first topic we're going to look at. We're going to look at the 5-day chart, some relevance, what's going on there. Second, we're going to take a look at the US dollar and how that relates to gold. And the third topic that we're going to look at is probably the most relevant for this week, and that's what's happening with oil and the OPEC. All right, let's get right into it. The first topic that we're going to look at is the S&P's performance over the past 5 days. We'll throw that chart up now. All right, when we take a deeper look at the chart, one of the most obvious things that points out to us is the drawdown in the market. The S&P lost about just under 3% in value over the past week. Pretty flat week by any means, taking into consideration the past couple week events. But the other thing that I wanted to bring to your attention is the volume, and the volume is shown in the red and green rectangles at the bottom of the chart. And what the volume is the amount of shares that are traded between parties on the secondary market. So typically pre-recession or pre-drawdown bear market, amount of shares that were being traded were in the 5 to 6 million range for a 5-day trading period. Now we're seeing that amount reduced dramatically. So that amount is probably about 3.5 million. And what I'd also like to point out is that if you take a look at the day end, kind of the last 30 minutes in the day, we've noticed that all of a sudden the Fed kicks into action. They start buying a bunch of shares in the open market, and what they're trying to do is maintain the value of the S&P and the stock market in turn. And I don't know if you've seen the meme, but printer go burr, and yeah, that's just what's happening there. And where my worry is I know the Fed has come out and said that essentially they're not going to let this market fail, but at the end of the day there's only so much that they can print out, and they should just leave it to natural economics in order for the market to figure itself out. In the next couple weeks is a big couple weeks. You have earnings reports coming out. You're going to find what companies have great balance sheets. You're going to find companies that don't have great balance sheets, and maybe even possibly some bankruptcies. So that's something to keep an eye out in the coming weeks. But that is kind of my main concern right now with what's going on in the open market. It's essentially you're propping the market up based on nothing, printed money. So that's something to definitely keep an eye out for. And that brings us into our second topic, and how the printed money relates to the value and the liquidity of the US dollar. The US dollar has typically been a safe haven during times of downturn. So in a recession, people flock to holding the US currency. But what we're starting to see now is that there may be a potential with so much printing of the US dollar that we could see a 10 to 15% pullback on the volume, on the value of the US dollar. So what that means is, in turn, is that could be a great opportunity for gold moving forward. Now, with that being said, definitely do your own research. This is just my own personal opinion, but I definitely think that with the unregular printing of money, withholding a market that we don't know what the true value is, combined with an overvalued US dollar, puts in prime position right now gold. Now, I'm not traditionally a gold bug because I don't see it doesn't yield anything. It's a very difficult asset class. But I think moving forward and putting my money, my cash into something to provide some type of capital gain, this is the strategy that I'm going to impose going forward. Like I said, it's definitely best to do your own research and come up to your to your own conclusions. Another thing when it comes to kind of that fundamental analysis of figuring out where the market's going, obviously we've talked about it in previous videos. I think that there's definitely room on the downside. We're definitely going to retest the lows of a couple weeks back, but from there, what I wanted to highlight is there's also some technical analysis, and I'll throw a chart up here from a guy that I follow on Twitter by the name of Walter. I'll throw his link down in the description if you're interested. But from what I can see from the chart is there is a cup and what seems to be a saucer forming. So I know that we've already tested some highs for gold in the past couple weeks, then obviously followed by the asset sell-off. We saw that gold price come down. It's come back charging. I think we're going to retest those highs, if not already, and push forward through there. So I just wanted to show you what chart that I'm looking at and kind of how I'm making my own personal decisions. All right, last but not least, we're going to talk about oil and what a week oil had for being probably one of the most undervalued assets over the past couple months, with the whole market going towards more environmentally friendly, which is a great thing. But we'll throw up the chart over the past 5 days and take a look at what's happening there. What you can see is a steady incline, and this is fueled from a tweet by Donald Trump in relation to the Saudis and the Russians coming to an agreement to cut production. Once they cut the number of barrels that are going to be in the market, that will reduce the supply, increase the demand, and in turn increase the price of a barrel. Now what we can see there is 14% it did alone on Friday. It had its single biggest gain when the tweet came out. That was April 2nd, and that was a 25% gain. That's the biggest gain that oil futures have ever had in a single day. So that's something to definitely watch over the next couple weeks. We definitely know with the North American society, a lot more people are getting, stay home, social distancing. The demand for oil across the globe is very low. This is the only way that they can manipulate and draw an increase in price. So that's something to definitely take an eye on. I think that the demand long term for oil will decrease, but I do think that oil over a 12 to 24 month time, once this all passes, should be up back in that $30 to $40 range. But that's just based on things that I've seen in the market. Who knows? I don't have a crystal ball. I wish I did. All right, well, thank you for tuning in. I appreciate it. Definitely would love your feedback. Throw that down in the comments. If you haven't already, please subscribe. I would appreciate that. And thank you for tuning in. Have a great week on the markets. Happy trading.